Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Let's take a look again at the euro currency. So the historical Trump speech to the Congress has happened, but actually it had minor impact on the currency markets, mostly because Trump hasn't brought any details on the tax reform that he intends to do, and in general, mostly he has spoken on domestic affairs that takes the other spheres of the life and has no a really big relation to the financial sphere. Mostly the action that we see on euro currency right now is a result of the Fed representatives' comments. So they right now give the rather clear hints that the rate could be raised in as soon as March. So and if you will take a look at the Fed Fund futures rate, you'll see that investors right now are pricing approximately 70% chances on the increase rate in March. Just a week ago it was around 30%. So as you can see, this situation has changed really drastically, and that brings the impact because on the forex market, because as we have discussed previously, in general the overall view on the markets was the expectation of 2-3 rate hiking in 2017, and nobody expect to get the first rate hike as soon as March. The previous overall consensus was on the June rate hiking. So that's why, as a result, you can see that market has formed, as we have discussed yesterday, on the daily chart, bearish grabber. Also, guys, if you remember, market wasn't able to hold above the monthly pivot point. This here we have already the March pivots, but on the February pivots, markets also wasn't able to hold above the pivot point and actually spent the rest of the February around monthly pivot support one. So now we have the one bearish grabber. Today we could get another one. So all these patterns point on taking out of these lows. This is, guys, another part in our large puzzle of weakness of this overall pattern. So previously, on the previous week and 2 weeks ago, we already have discussed some not quite obvious issues that point on weakness of this head and shoulders and then a very significant chance of the failure of this pattern. I have said many times already that in this action that we see here, it's not quite rational behavior for the bullish reversal. So here, the price action that we see on intraday charts absolutely doesn't correspond to normal behavior when the market turns to the upside, especially starting from that point, where on intraday charts market has broken all significant supports. Overall price behavior to the upside stands very choppy and sloppy. So it should not be so when the market turns to the upside. Currently, any upward action has no features of the thrust, has no features of the impulse upside move. That's why even earlier we really have some doubts on possible failure of the head and shoulders, but the appearing of the bullish grabber and significant chance on the rate increase even in March right now brings even more confidence with this event. This market really could drop here to the downside. We already said that you probably should know what will happen if market indeed will drop below this loss. It will mean the collapse of this head and shoulders pattern and drop first to the bottom of the head. And in fact, market, when the head and shoulders fails, market should break it totally. So it means that market should drop even below the bottom of the head pattern of the pattern. So that's why in the current circumstances we do not recommend to take any long positions here. So the only chance that we see for the bulls is the postponing of the rate hike. For example, on Friday, if non-farm payrolls will be poor or inflation data on the wage growing will be not quite strong, so this could postpone the chance on rate hike in March. If this will happen, market should play back the priced in chances on the rate hike. In this case, yes, market could change overall situation, but with this, we will know that only on Friday, and that probably will lead to destruction and raising of the grabbers, if this really will happen. But right now, we have the patience in place, and overall context looks bearish. That's why if you would like to take the short position, you could use the grabber pattern for doing it. So on the 4-hour time frame chart, guys, you can see that market also has broken this flag pattern, flag consolidation that we have discussed yesterday. And right now we're turning back to watching of this ABCD pattern that we have on the 4-hour time frame chart. Its target stands approximately at the bottom of the head. So on the hourly chart, guys, you could see that overall action, as we have said, is really indeed the boss retracement, because by the shape of the price actions, you can see it's very choppy actions, gradual, a lot of overlapping candles, deep retracements, and what's more interesting is that market has failed to pass through the weekly pivot resistance one. So pivot resistance one is held upward action, and it means that bearish trend is still intact, and that is just retracement. So as a result, for those of you who would like to trade on the bearish grabber pattern, you could use retracement back up to some of these fib levels. Your invalidation point will be this top, because this is the failure point of the stop grabber. So if market will return right back up and take out of this top, this will mean that grabber has failed. Also, I know that you like the butterflies patterns, although I usually do not use the butterflies on top. So butterfly buy should be formed on the bottom. But sometimes traders use this pattern, so you can see that here we have in general nice butterfly that has two destination points. It's approximately 105, 105.33. That's very short-term destination the market will follow in the nearest future. But the major context right now, guys, stands on the daily chart, and we think that it's not time right now for taking any long position. And chances that hand shoulder special will work has become very small.